Good afternoon, ladies and gentlemen, and welcome to the Filatex India Limited's Q3 FY26 earnings conference call, hosted by Branding Edge. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Janvi Kankaria from Branding Edge. Thank you, and over to you, Ms. Janvi.
Thank you, Sapnali. Good afternoon, everybody, and welcome to Filatex India Limited's earnings call to discuss the Q3 and 9M FY26 results. We have on call with us Mr. Madhusudan Bhagaria, Chairman and Managing Director, Mr. Ashok Chauhan, Chief Visionary Officer, and Mr. Nitin Agrawal, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Madhusudan Bhagaria to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Janvi. Good evening and a warm welcome to all of you attending our earnings call for the quarter ended December 2025. Joining me on this call are Mr. Chauhan, our Chief Vision Officer, and Mr. Nitin Agrawal, our CFO. I'll begin with a brief recap of our financial and operational performance for the quarter. On a quarter-to-quarter basis, the company delivered a meaningful improvement in profitability despite relatively stable volumes. Revenue for Q3 FY26 stood at 1,050 crores compared to 1,076 crores in Q2 FY26. Sales volume were 1,318 metric ton, largely in line with 1,01,391 metric ton in the previous quarter. Despite marginal moderation in revenue and volumes, EBITDA numbers increased to 93.58 crores, registering a 5.23 quarter-on-quarter growth, reflecting improved operational efficiency and cost discipline. Profit after tax rose sharply by 16.3% to 55.33 crores compared to 47.58 crores in Q2 FY26, indicating better operational leverage and margin expansion. Year-on-year basis, profitability showed a strong improvement. Revenue stood at 1,049.7 crores compared to 1,068 crores in Q3 FY25. Sales volumes were 1,318 metric ton, marginally lower than 1,432 metric ton in the corresponding quarter last year. Profitability metrics improved materially. EBITDA increased by 24.16% to 93.58 crores from 75.37 crores in Q3 FY25. Profit after tax rose by 16.3% to 55.33 crores compared to 47.43 crores last year. In first 9 months of the current fiscal year, we have exceeded the total EBITDA and PAT achieved in the entire previous year. Domestic demand remained stable during the quarter despite ongoing geopolitical uncertainties and volatility in raw material prices. Consumption of polyester yarn held steady, and we expect gradual improvement in demand conditions over the coming quarters, aided by better export visibility. A key relief has been the non-acceptance by Ministry of Finance of the DGTR recommendation on anti-dumping duty on MEG. This removes a significant cost overhang for the polyester value chain. The issue of the inverted GST duty structure on PTA and energy continues. However, the withdrawal of QCOs on yarns and PTA has eased supply side constraints. This allows access to competitively priced imports of PTA, particularly from China, which currently has surplus capacity. Softening PTA import prices would partially mitigate margin pressures arising from yarn imports from China. Recent global trade developments are decisively positive in India and apparel sector, with clear downstream implications for yarn manufacturers. The EU Free Trade Agreement is expected to improve market access and create a more level playing field, particularly for value-added textiles and apparel exports. EU has a market worth 371 billion, and Indian exporters are likely to have a breakthrough into this market. Export of textile and apparel will help stabilize domestic demand also. In the United States, the proposed tariff structure significantly improves India's competitive position, with China facing tariffs of around 34% versus approximately 18% for India. The relative gap of 16% is meaningful and structural rather than marginal. US market size is also large at $300 billion. The tariff differential may provide an edge which was missing due to high cost of raw material vis-a-vis China. This tariff differential substantially improves the attractiveness of sourcing from India and importantly neutralizes the comparative disadvantage that Indian exporters face vis-a-vis Vietnam and Bangladesh and a distinct advantage against China. The US remains the single largest global market for textile and apparel, and any sustained improvement in India's export competitiveness is expected to translate into higher export orders for fabrics and garments, better capacity utilization across textile value chain, improved demand visibility and pricing stability for polyester filament yarn in the domestic market. For a yarn manufacturer's perspective, these developments represent a clear medium-term demand tailwind rather than a short-term sentimental shift. A brief update on the CapEx. The company continues to execute its 690 crore strategic investment program focused on capacity expansion, sustainability, and energy efficiency and automation. Progress across projects remains largely on schedule, except for minor regulatory delays in the renewable energy initiative. We are buoyant about the medium-term prospects of the polyester industry. Structural capacity additions in PTA, easing of policy-related cost risk, improving global trade sentiments, and disciplined execution of our CapEx program together provide a strong foundation for sustainable growth and margin resilience. Thanking you for patient listening. Now, I'll be glad to answer any of your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Surya Nayak from Sunidhi Securities. Please go ahead.
Hello. I hope I am audible.
Yeah, go ahead. Yeah.
Thank you, sir, for giving me opportunity. So, a couple of questions. One is, what is the status of the RE power with Torrent Energy that is we were dealing with, and whether any further delay in that front? And secondly, I'm believing that the other capex are on stream. That is second. Any clarification on that, if any delay is happening anywhere? And thirdly, is that to understand what will be the key trigger for the first recycle plant that we will be observing the success of that to trigger for further setting up of planning for the further setup of the similar plants elsewhere. So there are three, and I'll have some common question later.
Yeah. Regarding Torrent, there were certain delays. That's why it was supposed to start in June, July, but now it is getting postponed to October, November. And we have had a site visit, and we feel they should be operational by October for sure. They had some issues with the government regarding evacuation of the electricity. Now all has been cleared, and we feel by October it should be done. Rest of the projects are all on time, which are in our hand. That was something which was not in our hand, because we have tied up with Torrent that we are an equity participant in that. Although we'll be getting 100% power, but the implementation is not in our hand. Regarding recycle, the key trigger would be once the product is acceptable by the customers and we come to a steady state sales and full production, then you would be looking for further putting up new plants and at what scale we should put up. All that depends how soon we are able to sell and what success we get with these customers. Because it's a new product, it's a new technology. So, but I think timeline should be 3 to 6 months after the startup of the plant.
Okay. So our the virgin polymer business. Will it take at least 6 months? Because in the virgin case, generally we start with upfront maybe 80 to 90% utilization, because that is the scale that is needed. But in case of the recycle, what would be the utilization percentage that would be we will be watching for?
We can start with 50% minimum. Mm-hmm. And that's why we have started to tie up with the customers right now only. Mm-hmm. And we have had a MOU with the Decathlon, everybody knows. So like this, we are trying with some more customers. There's still time. And we should be able to have a tie-up with them. And we are also giving them some sample products from our pilot plant so that they are sure about the quality and they can take up offtake agreements with us even before the plant starts. So hopefully it should not take much time, maybe 3 to 6 months to come to full stream.
Okay. And for that, the raw material linkage from the ready-made garment players, the cut clothes, those are actually in place, so there we will not face any issues.
We are in the process of doing that, but there are a lot of consolidators in Gujarat who are buying from all these people who are making fabrics and garments, and they are consolidating that waste and selling. So we have tied up ties with them, and they are assured they'll be able to supply the volumes which we need.
Okay. And regarding realization of the virgin polymer, there is some mild reduction in the realization side. So just to understand whether this kind of level will be maintained throughout the maybe Q4 and Q1.
Q4 will not be as good as Q3 because government had lifted BIS on November 12th or 13th, I don't remember exactly. So after that, there is a flood of Chinese products coming to India. So there is a pressure on margins. So it will be slightly lower than what we have done in Q3. So Q4 could be slightly lower than that. But we are trying to mitigate that by various ways. But still, it will be slightly lower than Q3.
So how much the current differential between the China and India as of now?
See, China, India product-wise, we go like POY, the margins were before BIS, there is a less, maybe very small difference. PTY also the difference is not there. Major difference has come in FDY. FDY prices in India were quite high compared to Chinese, so that have come down. But recently, even Chinese prices have started going up, and now China is going for a holiday for almost 15 days. So let's see when they open up what are their price levels.
So
but I feel, tell me.
Yeah, just to understand, because the current scenario post the EU deal, what I understood is, Turkey was a major supplier of yarns, man-made yarns to European side. So Turkey was outside the EU, and that will be impacted. So in that case, given our uncompetitiveness to export market because of the China's dominance, so will we see that any kind of
once the EU treaty is in force, then definitely we will see improvement in the margin. Right now, EU treaty has been signed, but it has not been enforced. It has still to pass certain legislative measures in India as well as in Europe. So once that come into force, we will have advantage over China. This thing, even in the yarn and other garment and fabrics and everything. So then margins are likely to improve. And see, all these development have happened very recently. Even the US development has just happened. 2 days back, only the 25% extra tariff has been lifted. And this 18% has still not come into force. It might come into force maybe in next 1 or 2 weeks or 3 weeks, I don't know. So all these things are changing so rapidly, it's very difficult to predict, but these are positive signs. And maybe we are able to improve our margins maybe from next month. But I think from next quarter, definitely there should be some improvement in the margin because US will come into effect by then. Europe, I think, will take another 6 months to come into force, whatever we have heard in the news.
Correct. But at given point of time, even if the export market looks healthy, maybe post EU enactment, we will not think of further going into the virgin side. I mean the man-made fiber.
No. We will first explore the recycle, and if we don't see much scope there, then we'll go into the virgin side. We want to expand only in the recycle because that is something very proprietary to us. And we don't see much competition over there. It's a new thing. And if it's accepted, then because we have limited resources, we can't grow everywhere.
Correct.
But we'll go multifold in that field. It will not be a similar plant. It would be either 5 times, 7 times, depending on how it goes.
So maybe our long-term ambition is to have around 1 lakh plus capacity, aggregate capacity put together.
Long-term vision would be to have more than 1 million. 1 lakh is too small. Next round would be more than 1 lakh.
27,000. We are starting with 27,000.
Yeah, so 1 lakh is just for time. I said the next point would be at least 5 to 7 times.
Okay, but for that the raw material linkage should be in place. Otherwise, we may not get.
We'll find out. There's a lot of raw material available.
Okay.
There are a lot of brands which are ready to do. There are a lot of European countries which are ready to. But we are already exploring every possibility. We started exploring that.
And any timeline, aspirational timeline you have set for that 1 million capacity of recycling?
Only once this plant is operational, I'll be able to do it.
Okay, sir. Thank you. I'll comment.
Thank you. We have the next question from the line of Neeraj Mansingh from White Pine Investment Management. Please go ahead.
Thank you for the opportunity. I just wanted to know a few things. Just on the tariff side, assuming the European tariffs are approved, European FTA is approved by their own parliament, can you give some number-wise understanding how we are competitive versus China on the imports into US as far as yarn and fabric is concerned?
Right now, the tariffs in Europe are ranging from 5% to 12%, depending on the category of the product. So, from yarn to fabric to garment. So, India, what we here will go into zero tariff. China will have the same tariffs what are today. So, India will be more competitive to that extent against China. China is the biggest exporter both to EU and to USA. So it's a big chunk. Like India exports percentage-wise would be maybe 5-6% to Europe. US, I think, is around 8-9% of their total imports. But China is close to 28-30% of their total imports. So now we'll be competitive against China. And also main exporters, which is Vietnam and Bangladesh, their LDC status will also finish in December 2027, which gives them a zero duty in Europe.
Yeah.
So all that will help us to compete with them, because we can compete with Bangladesh and Vietnam even at the same duty. But they were enjoying zero duty, whereas Indians were paying more duty in Europe. So now we'll be at par with them at least once this is effective. And we'll be better off than China.
Got it. But are we so, is the difference in price so narrow that we, even if say a 5% duty in Europe goes away, we can...
See, yarn, even 1%, you leave the order. That's the kind of competitiveness. 5% is a very big number. And for garment also, I am sure 5-7% are a very big number. The margins in export businesses are not that great. Only in retail and other things are branded, you find bigger margins.
Yeah. Okay. So any thoughts you have, and does Turkey import yarn as a whole from China?
Yes, it imports from China as well as India also. India also sells to Turkey.
So because there's a reciprocal tariff, there's a quid pro quo that Turkey needs to implement. So wouldn't we benefit on the exports to Turkey if the yarn demand goes up, if the EU FTA is signed?
Yeah, definitely will benefit if it goes up.
Okay. Okay, got it. But any numbers you have thought on how much the margins can go up? Or I know it's a commodity business.
It's very difficult to say right now. Everything has just happened in last 1.5 months, not even 1 month fully. 27 January, I think the EU agreement was signed, and US came on 1st or 2nd of February.
Right. I slightly missed the starting point on the recycled polyester. What is the status? I'm very sorry, I missed the initial remark.
So we are on track. Hopefully, we should start production by end of September. Everything is on track.
Okay. And
yeah.
Okay, and what is the
only
price?
On the power front, we are delayed because we are dependent on Torrent, which we have signed. So they had some evacuation issues with the government. So we have also sent a person. We had a site visit. Their equipments are there, and I think they should be operational by October.
Got it. All right. But in terms of margins, how is it faring right now for the entire polyester side? FPOY.
Polyester side, margins are under pressure, especially in FDY, after the BIS has been lifted, because FDY prices are quite low in China. And especially only one item of FDY which is coming is, there are two varieties in FDY. One is Semidal, one is bright. So they have ample production of Semidal. So Semidal margins are under pressure more than the bright.
Okay. And any numbers on how much the margin has fallen on the FDY side in one quarter?
FDY side, yes. In Semidal it has fallen by 6 to 7%, and bright maybe 2%, 3%, something like that.
Oh, got it. Okay, I'll come back to the queue. Thank you very much.
Yeah.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Siddharth Basi, an individual investor. Please go ahead.
Hi, good afternoon. Firstly, great set of numbers and great outlook on the business. So no complaints on the business front and with respect to what the management is doing. Just a two-part question from my end, and the second part will be a slight critique. The first question, there have been rumors in the markets regarding anti-dumping duty coming on the Chinese yarn into India. So any clarity on that? Is the company expecting the same? And if that were to happen, what sort of margin improvements do we see? And secondly, this is more with respect to being a minority shareholder. While the company is doing a great job and I don't have an issue with respect to the business being run, as a minority shareholder, when you see on the Bombay Stock Exchange, over a month, only 100 unique fans have traded the stock. The stock's valuations are nowhere close to what the numbers reflect and what the peers in the market are. Can the company or the management ensure greater interaction with mutual funds, greater interaction with PMSs, so that the larger PMS, mutual fund and retail community becomes aware of the business? Because while the business is doing really well, true value creation for the minority would happen when there is an improvement in the PE ratios and the stock pricing with respect to the numbers that we're throwing out year on year in a great way. Thank you.
The anti-dumping duty, only there is one anti-dumping investigation going on, that is on textile. I don't know the outcome will be, but yes, there is an investigation going on textile against China. And your other question regarding the valuation and other things. So we have recently hired a IR and a PR firm, and let's see, maybe it will help to improve the image of the company amongst the investors and give you a better return in the stock market.
Thank you so much, and congratulations and all the best.
Thanks.
Thank you. We have the next question from the line of Vatsal Jain from Universal Consultancy. Please go ahead.
Hi, can you hear me?
Yeah, I think.
Thank you for the opportunity. My question is on the quality control order and the impact of its withdrawal on company's margin and debt repayment schedule. With regards to capacity utilization, what is the projected capacity utilization once Ecosys goes live? And additionally, how is the capacity expected to increase on a quarter-on-quarter basis, specifically for October to December 2026?
The BS lifting has definitely impacted the margin somewhat, because now people have access to China's products, because China is selling at a cheaper prices. They have better availability of the raw material at a better prices because they are surplus in PG also. That is the main thing. Regarding your debt repayment, our company is virtually debt free at the moment, so there is no problem that we will have a problem with the debt repayment, because we have a debt of around 100 crores and we have cash reserves of more than 100 crores with us. So that's not a problem. And going forward also, whatever debt we are taking is very minimal. So there should not be any problem with that. Regarding capacity utilization, the company is utilizing fully the capacities available. We had a small fire in October 16 in one of the plants. So we lost a little bit of production. That was around 1.5% of the total production. Otherwise, we are always, most of the time, running and utilizing full capacity. So increase in the volumes will only happen once we put in more machines. So we are increasing our capacity by approximately 55,000 tons per annum, and that should be operational by September 2026. So in Q3 of next year, you will see improvement in the capacity. Before that, the capacity will be more or less in the same order.
Okay, thank you. I have another question. With the signing of the European FTA, EU FTA, and stronger EPR norms by the European nations, how does that impact our company? And I see that our exports have reduced quite a bit in the recent times. So does that increase our export share? And also, how does US...
Yeah, it will increase our export share because we'll become more competitive against China in Europe once the EU is signed and become enforced. It is already signed, but it has to become enforceable. What was the other question? Sorry, I forgot.
Also, regarding US tariffs, the same thing regarding US tariffs.
Yeah, same thing will happen. Yeah. And EPR tightening norms will help us in our recycling initiative, which we have taken up. The companies would be more than willing to tie up with us, because there is hardly any company which is doing textile to textile recycling. most of the recycling which is happening in the world is from bottle to textile.
Okay. And are there any other competition companies in circular polyester recycling?
They have announced projects, but ours would be one of the first one to start. I don't know what will happen when they come in, because they have announced that nobody is coming before anytime mid-27.
Okay.
And they are also first-time projects for them. It's not that they are doing it. All of them have done some pilot scale plants, and now they are all scaling up. And everybody has a different technology. It's not that all technologies are similar. Ours is one of the least capex per ton wise, if you will see the numbers. Ours is least capex per ton wise of production. Per ton of production, our capex is the least compared to any other which is coming in the near future.
Okay. And these are like the competition is Indian companies or international companies?
Both. There's one Indian company which is coming up, and there are quite a few international companies. In total, I would say there would be total maybe 5 or 6, not more.
Okay.
Thank you. A reminder to all the participants, you may press star and one to ask a question. We have the next follow-up question from the line of Surya Nayak from Sunidhi Securities. Please go ahead.
And so, just to understand globally, what is the mandate being given to the garment maker to source recycled fiber? So, let's say in the context of aggregate fiber that is being used, if you can give some color on that. And secondly, our estimates are telling that we may not be requiring further acquisition date for the projects. So, what is the thought process in your case? Whether year-ending dates will be rising or it will be at the same price, same level?
Rates of what rising?
Pardon, sir?
I couldn't get your last question. What was it? Year-end, what will be rising?
Yeah, earlier you were saying that now around close to 120 to 130 crore debt will be raised for the purchase of some German machineries. So whether we will be requiring at all further dates because the internal generations are quite robust.
Debt you are talking.
Okay. Debt, yeah.
Yeah, we will be taking some debt. Like for recycling, we have tied up for 200 crores of debt. And if our internal accruals are good, maybe we'll take draw less than that. And for other expansion of the yarn in parent company Filatex, we have tied up for the ECB loan against the machinery which we are importing. So that in any case will take. That is 130 crores. I mean, it's in euro. If the euro value changes, it changes approximately 130 crores.
Okay. So in all, how much debt you are expecting to take in FY2025?
Once all the projects are completed, it will be like 330 crores of new debt.
New debt. Okay.
Yeah.
And regarding the FX fluctuations, if you can give some color as to what it is, giving rise or let's say creating a trigger for rise in the fluctuations, whether it is related to
that I cannot. I'm not an expert on the currency. I cannot see what triggers.
No, about on account of what actually. I mean, is it related to raw metal import of raw metal or what actually? That is what I'm saying. Whether an operation.
So raw material. Yeah, raw material, when we import in dollars and we get a LC 90 days credit and we keep on hedging it as and when we are advised. We have kept an advising company who keeps advising how to progress in the foreign currency because we are not experts and we work according to the advice of that person and the company.
Okay. And sir, what is the update on the Gale's PTA plant? Because we are here, what
So mixed
Gale?
numbers. I think when I talk to the company, they are saying they'll be able to give material by April end.
Okay.
But
Okay.
some people are there. Some people are saying they'll come by June. IOC is likely to start from October, November this year.
Okay. Then what the benefits we were expecting from the last quarter of the current fiscal, that will be spill over to maybe next quarter, right?
Right.
And regarding the mandate, overall mandate of the garment makers to source the recycled fiber, if you can call it.
Europe, there is a EPR, extended producer responsibility among all the producers who are selling in Europe, that they have to use certain percentage of recycled material, and their government is also insisting that recycle should be textile to textile, not bottle to textile. And they also want to use that, but it is not available as of now, so they are forced to use the bottle to textile. Even if they want to use, the availability is not there. No?
Okay.
So they're all tying up with various people who are coming with textile to textile already.
So is it some kind of color you got, like maybe 25% to 30% of the virgin fiber they need to procure a recycled one?
Right now, I think the mandate is starting from 25 to 30%, and a lot of companies have said by 2030 or 2032 they will go 100% on that. But it all depends on the availability of the yarns also. No?
Okay.
And it is not only polyester; they must be using maybe recycled cotton or other fibers also.
Okay. But we are not going to get any benefit from the EPR side once our facilities will be in place.
Our benefit is that today the demand is there and the prices are much more than the virgin. The demand of virgin, these recycled prices are very high compared to the virgin prices.
So you still believe that now whatever you have guided earlier of 35%?
Yeah.
That kind of margin will be still gettable?
Yeah, they should be gettable. I mean, nobody can guarantee, but they should be gettable, because what I hear, the prices in the market are much more than what I have guided for.
But much depends upon whether the new capacity is coming in place, how soon that new capacity is coming in place. Because
there's a lot of demand, so don't worry about the capacities coming in. The demand is much more than the capacities which will come in next 3 to 5 years.
Okay, so all depends on how quickly we scale up our business. That is important.
Right.
Yeah. Thank you, sir. Thanks.
Thank you. We have the next question from the line of Aryan Bhatia from Inved Research. Please go ahead.
Thank you for the opportunity. My first question is regarding the timelines. Can you provide the timeline of all the capex which coming in? When will this all be?
Timeline. All the capex are on timeline, other than the torrent which I have explained again. That torrent of hybrid power is a little delayed. We thought, I think it should be operational by June, July. Now it will be operational somewhere in October or November beginning.
So all the capex will be live by 27 or 28?
So other capex are all going to be operational by September 26. This will be operational by October, November 26 only. Nothing in 27.
Okay, got it. And sir, my second question is regarding the withdrawal of BIS norms. Can our margins be like similar to what happened in 23-24 due to the Chinese dumping?
No. Even China is also going for an anti-erosion policy. You might have heard, for a lot of products. They are closing their inefficient plants. Any plant which is older than 15, 20 years, their government is closing that, and they are also trying to improve their margins. How long they will keep on subsidizing the world?
Okay, so there might be a 50 to 100 basis points of impact due to this. Not
not 20, 20. I don't think more than that should be there. But maybe effect of US FTA, then EU FTAs would mitigate all these also in the coming quarters.
Got it. Got it. So and my last question is on debt. Like current we have 100 crores of debt and incrementally we are taking 330 crores of debt. So overall debt will be 440 crores.
Yeah. And also we'll be repaying, so maybe by the year, end of FY27, we might be still net maybe 360 or 350, something like that.
Okay, got it. Thank you. Thank you, sir. And best of luck.
Thank you. We have the next question from the line of Swayam from Pinpoint X Capital. Please go ahead.
Hi, sir. I just have only one question. Like, what is your future plan once the first recycling project is a success?
Future plan is to grow on that, and the next plant should be at least 5 times the capacity of this.
Okay.
And we are already started looking where we should put it. We are also exploring if we can go out of India. There are certain places in Europe where we are talking, they might offer some incentives to take care of the dumping of the garments in those countries.
Okay. So, do we, like in future, we would be needing, more fund for this, and will it be utilized by internal accrual or like debt?
Yeah, it will be always a combination of internal accrual there.
Okay.
And maybe we can raise equity also in the future if required.
And how much capex would it might take?
It should be in the vicinity of anything around 1,500 crores.
1,500 CR.
Yeah.
Okay. Thank you very much, sir. That's all from my side.
Thank you very much. Ladies and gentlemen, that was the last question for today. And with that, we conclude the question and answer session. I now hand the conference back to Mr. Madhu Bhageria for the closing comments. Thank you, and over to you, sir.
I'd like to thank everyone for participating and sparing their time to join us, and hope to talk to all of you on the next call of Q4 of this year. Thank you, everyone. Bye.
Thank you. On behalf of Branding Edge, that concludes this conference. Thank you for joining with us today, and you may now disconnect your line.